What's going on, everybody? This is Jordan with Conquer Trading and Investing, and you're looking at a chart here of the S&P 500. In this video, we're going to take a look at what happened today during the New York session, as well as what we're going to be looking at overnight and into tomorrow's session, how we're going to position ourselves. We also have a really interesting video. We're going to look at some really interesting charts to see how retail is positioned versus institutions. We're going to see who's right, and we're going to see what happens next here right now. All right, I'm gonna break this down and we're gonna start here on the 30-minute chart. Those who started with us this morning, we live stream every morning at 9 o'clock a.m. Eastern time, setting the plan in motion for the session ahead. And there's a couple of things we looked at. Yeah, the S&P was trading down a little over 1% at that point, but what we were looking at here is where we can lean in to the long side. Why the long side? Let me first put in a couple of levels we were watching this morning. We were watching 29.14 and we were watching 29.20. All right, now I'm gonna get into those levels and what they mean in just a little bit. First, I wanna just pull back a second and give you a little bit of perspective. Why we are above this trend line over here, you could see this trend line connecting these points. Here it was support now after being turned from resistance and then held as support again. And also at the same time, above the really important strong resistance, now flipped support at 28.89 in that area. We are quite bullish, right? Even though this morning we were seeing a pullback, what we like to do, not that we don't trade both sides, but what we like to do is wherever our bias is lean in and buy off support in uptrends or sell off resistance in downtrends. During this session, we were not looking for any opportunity to the short side, only where we could lean in on the long side. Now let me point out those two levels we looked at and what happened. We did say two things. We said, and this is before we get into what our plan is for the sessions ahead, we said that if we come back down into this support, right, at that point we would look to buy. We would look to lean into that support, and if price held it, we would look to go ahead and trade back towards the trend. And we also said that if we trade above this level right here, which was 29.20, at that point we would look for a long. However, it didn't happen. Why? Even though you could see here price broke above that little bit of local resistance, flipped it into support, and then resumed up, normally this would be an entry and this would have been a nice little trade. However, time of day is everything. And this happened during lunchtime. We stay away from the market. We do not trade. As you could see, there was a little bit of follow through, right? There was about 20 points of follow through, and that move has since retraced. Where does that leave us? If you look over here, now we're looking at intraday levels right here. We're looking at intraday levels, okay? Now you could see this was resistance, which has now been possibly flipped to support. So what happens right now if you see price resume off this? Is that a good entry? Well, I don't know. Let's take a step back. Let's look here on the 1 hour. And now because of the time of day, we could actually even look at the 2 hour. And let's take a look. All right, that's our line in the sand. This is local. I see myself, I'm neutral. I see over here really strong support. And I see over here, resistance up at 29.72. By the way, for those listening and not able to see the levels, that support is at 28.89. And you can see we're about halfway now between that, which is no man's land. What does no man's land mean? No man's land means there's really no edge to the upside or downside. So before we take a look at what's next and how we can position ourselves, let's take a look at some interesting charts here. Here we're looking at discretionary versus systematic equity positions, okay? Now discretionary investors, they do tend to be retail, and you can see that they are for the most part positioned close to being long on equities, while systematic strategies such as algos, they are really just now starting to reduce their short positions and go long. Interesting, right? Let's take a look further. This is commodity trader advisors, okay? You could see also they are finally, after being positioned short, finally starting to go ahead and lighten up towards the long side. All right, now here's where it gets really interesting after this. This is futures, and futures tends to be hedge funds. And you can see that they continue to be positioned at short very short over here. Okay, now why this is all interesting is because I want you to see how professional traders and institutions are lined up against retail. And here's a look at Robinhood data, and you could see this is the number of stock positions held in Robinhood, and you could see that ever since the virus, they've been buying the dip. So right now, retail is on the right side of the trade. Retail is on the right side of the trade, while institutions look like they're on the wrong side. Why is that interesting? Who's right? Well, we don't know yet, but we could follow the money. And I want you to follow the equity fund flows. And notice right now, right, as funds are flowing out of funds, you can see that the stock market is rising. Now, this is like called the jaws of death. Usually they snap shut. Now, which way are they going to snap shut? Well, look at this one over here. You could see this is the last time they were separated, right? And they kind of snap shut in the middle. And then over here, you could see we were separated again, and then they snap shut towards a drop in the S&P. While over here, we just looked at 3 different ways that the jaws snap shut, and all 3 were different. So it doesn't really give us an indication about who's right or who's wrong, but we do know that someone is right, and we're going to find out soon who it is. Now, what could make the stock market sell off? If you've been following the news, you know that there's been threats of China invading Taiwan. The U.S. has responded by sending military presence into the South China Sea. And now we see out of China, because of that, there's a bit of a more hawkish stance. And they're asking or they're suggesting that China should back out of the Phase 1 trade deal. Now, if China were to back out of the Phase 1 trade deal, that could absolutely put some further pressure on the markets. We all seen this play out before. Now, it doesn't mean this is not a threat and that they're going to do that. You have to understand that China is also in a very precarious situation. Now, the only threat that they really have is to go ahead and to sell U.S. treasuries. However, if they were to do that, this is a whole different set of circumstances than it was 6 months ago. If they were to do that right now, the Fed would just simply step in and be buying them. So their ace in the hole, their big negotiation tactic, their threat is really not as much as it was, right? But any tensions, now also remember, President Trump is looking to be reelected, and what that could mean is finding a common enemy. That could come in the form of China, and you could see trade tensions really, really escalating in the coming weeks and months ahead. That could pressure the markets along with everything else that we're all aware of. Now let's just look at what we could do best, and what we could do best is follow what's going on, 1 to 5 days out. Now again, most of you know that we live stream every day at 9 a.m., a half hour before the U.S. equity markets open. The first thing we do is look at the S&P, and we set our plan for the session ahead. Here's what I want you to understand going right now into Asia and London. Right now, we are really trading between 2 important levels. Okay, you got the resistance up at 29.72, and you got strong support coming in at 28.89. Okay? Now, we are right in the middle in no man's land. When we are in no man's land, I tend to stay away and wait. Now, what are we looking to do? What happens if overnight we do come back down and we test the 28.89, right? Is that an opportunity to look and to see if it holds and get in? Absolutely. That's really the only thing I could see that's happening overnight that could possibly lead to a position, right? So aside from that, I don't see anything on the upside. I'm not looking to go ahead as we come into the resistance at 29.72 and go ahead and fade that. That doesn't really make any sense. You could see, first of all, this upward slope of price, meaning to me that right now, that buyers, why they're getting held up around that level of 29.72, the sellers so far are dwindling in demand, right? So it looks like we're going to get a breakout to the upside. And if we do, that's a beautiful trade that we're going to get involved in. Could that happen tonight? Could that happen overnight? Possibly, absolutely. Even if it does, I won't look to go ahead and take that breakout. What I'll look to do is right before the New York session, establish a plan for how we could go ahead and look for a retest of that level. make sure that it's flipped to support, and then on the resumption, get involved. But above there, that looks like a nice breakout that we want to get involved in. Now, taking the breakout itself is a low probability trade. We always wait for the retest. Now, people might ask, what does that mean? On what time frame are you looking for a retest and confirmation? And unfortunately, trading the S&Ps, that's not black and white. That really depends on the time of day. It depends on the current volatility, how fast the market's moving, and it could happen on the 30-minute, it could happen on the 1 hour, it could happen on the 15-minute, or even the 5-minute. If it's in the first half hour, 40 minutes since the U.S. equity markets opened. All right. So right now, just to recap, we are currently in no man's land between resistance at 29.72, support at 28.89, and we are dead center. Okay. Yeah, there's a bit of a bullish bias, but not much, and we're just simply on the sidelines. Now, a lot of people, they just want to take trades. They think as a trader that they need to be involved in the trades to make money, and that's why they're losing money. Really, you want to be like a predator. What does a predator do? A predator watches his prey, looks for the weakest point to attack, and then attacks, right? If you spend more time watching the markets and less time trading, you're going to be a lot more profitable. Now, we know that if we come in and we test this pretty strong, or decent, I should say, support over at 28.89, that's a place that we're going to look to attack. We'll look to see if that holds, and if price resumes up, that looks like a beautiful entry. Aside from that, if you step back with me, you can see that right here, that price so far is coming up against the resistance at 29.72, and you could see the angle. You could see over here that the seller is so far becoming less and less, and generally this could lead to a breakout. If we do break out, I think we have a lot further upside. I think that the 30.97, 30.96 resistance is going to come into play. That's what, like 80 points above. That's a beautiful move. That's like over 3%, around 3%. We want to be involved in that. Yeah. Now, we have to wait for the market to show us its hand and what it's going to do. Until this trend line here breaks to the downside, we maintain our bullish bias. Below that trend line, which will also coincide right now with the support we have over here at 28.09, we maintain our bullish bias. It doesn't mean we can't trade both ways. It doesn't mean that at all. And if tomorrow, this angle that we were looking at over here, if we break outside of that to the downside and then get below this support right now, the support at 28.89, yeah, then we might be looking to attack the downside up into this trendline resistance, trendline support. But right now, that's not happening yet. We'll check that out tomorrow. We'll look at what our plan is for tomorrow. Right now, you just want to stay neutral unless we test the support at 28.89 or break above 29.72. Those are two trigger points that we're going to look to get involved. Listen, everyone. Thank you for all the comments. Thank you for all the discussions that take place. I try to read almost every one of them. It's not always possible. We do have 5 kids, right? 4 under 4 years old. But it was Mother's Day over the weekend. Had to go ahead and help out my wife as much as possible. I will catch up tonight on all of the comments and on the discussion and enter into them whenever I can. Everyone, if you learned anything, if you appreciated this video, if you want to see more, go ahead and smash that like button, show your support, help the channel, help the Google algorithm know that you like what's being shared so they could share it with others. And until tomorrow, have a beautiful day, everyone.